Good morning, everyone. Welcome to our Monday morning trading room. I trust you had an enjoyable weekend. Mine was quite nice. The weather was very cooperative. Got a chance to go out, play a little bit of golf. Didn't play all that bad, considering it's been a little while. All right, let's take a look here what's going on this morning. You can see here on the Geiger counter before the Geiger counter goes off the screen, we had a little bit of a burst of action right out of the open. A lot of buying and selling. It looks like we're getting some selling coming through here now as well. So a little bit more active for a Monday morning, a little more active than what we've seen anyways. Overall, the market's still hovering more or less the same price levels as they were on Friday. We seem to be stuck here around 6,700. You can see we've challenged the overnight highs here out of the open, and the market falling off here now to the hard edge. Friday session, a slow sideways grind lower, not really all that impressive. And then the early morning session here, big move lower through the European session, and then a rebound coming back into the North American Open. So, like I said, it seems fairly neutral overall. Neutral to bearish, perhaps. It's hard to say just yet because it does seem so balanced right now. Couple early signals here on the Eagle now, as well as the Raptor. Your first in-sync signal for those of you inclined to do that trade. So the Eagle coming into the hard edge, giving the red bar buy signal, and it's trying to push higher from there. The Hawk also bullish, both with a first micro-macro cross and a macro pullback. The Falcon trying to get bullish here with a late filter entry signal. Those tend to be pretty reliable. But we're kind of chopping around a bit. So no real direction to speak of just yet. Okay, a little bit of a attempt at a trend change perhaps. We've got the makings of a rule of three signal here in the Eagle. Right now we've only got the one counter trend signal, but we've got the test of the extreme. That's the important part. And we're starting to produce counter trend signals here. Okay, so we've got two signals counter trend. A lot of times at this point, I will take a look at maybe setting up a trade, sort of a just in case type scenario. And because it is a counter trend move, oops, Here, let's just short it. Oh no, you can give me a chance to get in. And oh, they slipped me a couple of ticks there. Stinkers. Why is this market so thin? It's not like the NASDAQ to slip you. Yeah, David asked, what about an OCO order outside the range? Sure, an OCO order works just as well. You can bracket the opening range like that. Buy above, sell below. Still pretty early, especially for me. I don't usually take a trade this early in the day. David says after you set prices, you didn't seem to have to hit submit. It's sometimes a lag in the screen sharing software, and I've done it so often, sometimes it seems like I do it a little bit fast. You know, I have my set prices and then hit the submit order. But trust me, you do have to hit submit in order to activate your order. Okay, getting a little bit of a pushback, which is typical of a trend change attempt. Here the hawk, a lot of yellow bars creeping in. The falcon's a little confused. We've got red trend lines, green trend lines, and let's see what's going on here on the raptor. The raptor cloud is trying to change, but it's going to cross over the other way again. So we may actually produce a bullish buy signal here on the raptor. Yeah, there it is, the number one signal. So once your clouds come back into sync and they're preceded by a pullback, this was only a 1-bar pullback, but you do produce a number one. Given the sideways nature of the market, I would suggest that you do any signal on a second push, meaning you allow the signal to engage, you see where the market reacts, and you use that reaction as your entry point. That way you're going to look for some renewed momentum to bring you in. You could also draw a trend line across the tops here. And consider that as part of your entry parameters. Because you know there's going to be sellers here. Likewise, on bullish trend lines, you know there's going to be buyers. Remember too, the signal prompts only notify you that the programming parameters have all been met. So you do have a qualified signal, but it's still okay to bring common sense with you and consider the validity of the signal in light of the current market conditions. All right, they're going to try it again. I would say this whole 66.90 zone is a little problematic right now. Right down here near my entry, near the lows. Come on. All right, while I'm waiting on that, where is my next resistance zone on the way down? Maybe I'll use that as a target. 66.75 and 3/4. Well, that sounds like a very nice number to me. So we'll roll this down here, maybe a little bit deeper, a couple of ticks. Okay, we do have a little bit of a bearish push going on now. Yeah, David, I would agree. David says there seems to be a lot of support around 66.90. And just going back, if I shoot a line here at 66.90, you can see the market really liking this number. I think it's kind of a delayed reaction actually to 6,700. You know, traders aren't that specific about things. I think 6,700 is actually the number that they're reacting to. All right, at break even, let's play with a few different stop strategies. Maybe the bar high low. With the eagle, I really hate to give up any open profit. All right, I'm really going to stick it to them now. Last chance. Come on, get down there. No! All right, well, they tagged me out. I think that might have been premature. I think 66.75, a pretty reasonable target for this leg lower, but that's all right. It was still a decent trade. And there they go. So I was a little anxious with my stops. I hate it when that happens. Oh well. I'll just be wait for a little while here for the next opportunity. Okay, a little bit of a pushback now. So maybe it wasn't so bad taking profit where I did. Okay, well, they did get down there to 66.75. Just out of curiosity, well, it looks like the ATR might have held me. Yep, the ATR would have kept me in long enough. All right, that's all right. Like I said, you can't be too upset with the trade. It was still a profitable trade. Now that we're back down to the median line, however, we may get a little bit of a reaction. No, they're still tailing off a little. Yeah, David says, looks like you were premature in your stop. If there's one thing I'm guilty of, besides trying to take a counter trend trade once too often, is I will tweak myself out of a perfectly good trade. It's a problem that I've struggled with pretty much my entire trading career. And you're going to find, like I say, trading is a very personal business. You're going to learn a lot about yourself, good things and bad things. And, we all have certain things that we're comfortable with and uncomfortable with. And with me, for whatever reason, I tend to play with my stops sometimes a little bit too much. Which was unfortunate because it was a very nice progression lower. Dan's asking, on the Falcon signal, would you take as the trend continuation signal of the last three? All right, well, let's just review here. I'm not entirely sure. I think you're referring to this signal right here, but let's just review the Falcon signals anyways. For the Falcon signals, we've got three main signals that we look at. The two strongest signals are the trend change signal and the late filter entry signal. The late filter entry signal you see me point out a lot because Mark, who's not in the room today, but it's one of his favorite signals. It's a very, very reliable signal. And just in case you haven't seen it before, let me find you an example. Here we go. Here's a late filter entry signal right here. The late filter entry signal occurs when the filter goes out of sync and comes back into sync. However, the trend line never changes color. You produce a signal that is called the late filter entry signal. It tends to be a very reliable signal. The trend change signal is also a very reliable signal. The trend change occurs when the trend line changes color, and you get this push that changes the trend line color. Then you get the counter move. In this case, there's only one bar against the trend, and then you come back with your signal, with your new trend signal. This is your trend change signal. Those are your two very reliable signals in the Falcon. The other signal in the Falcon is just your typical trend line touch signal. I guess that's what we're seeing right here. So the market comes back, touches the trend line, and then produces a signal with trend. This is very much in sync with your number 3 signal on the Raptor, for those of you trading with the Raptor. It's important for the trend line touch signal to occur either right at the trend line or reasonably close. I'm not going to go through the trouble of finding you a signal, but occasionally you get a signal that produces with quite a bit of a gap. There isn't one here, but I'm just showing you the gap between the bars and the trend line. And what will happen is the signal will produce, but you need to leave yourself some room because the market's very likely to retreat into that trend line first. So when you're taking any continuation signal, whether it's a trend line touch signal on the Falcon, a macro pullback signal, or 4-arrow consolidation on the Hawk, red bar buys, green bar sells on the Eagle, or your number 3 signals on the Raptor, trend is a big deal. So because it's a continuation signal, you want to see something resembling a trend. And I think it's fairly safe to assume at this point, we've got a pretty well-established downtrend right now. So here's the trend line touch signal. And, you know, providing you could set it up with a reasonable stop, I think the way it turns out, you actually didn't need it. But so long as you could set a reasonable stop on the trade so that you don't get filled and the market, you know, makes a little hiccup like this before heading lower again, I think, sure, go ahead, do it. The whole point in setting a reasonable stop is not to get stopped out immediately. Because remember, we're using our risk parameters here, so our risk amount doesn't change whether we have a tight stop or a looser stop. I'm still going to be risking about $300, $350 on this trade. So why not give myself a little bit extra room? If the market does rally up a little bit and then heads lower, I can always bring my stops down. And let's say it reverses and stops me out. Well, okay, instead of getting stopped out for $355, I got stopped out for, I don't know, $175, $180. So it's, you're still losing less, but you gave the trade a chance. And that's what I tend to refer to as a good loss. There are times when the market just tosses you a curveball and you miss on the trade, it turns into a stinker. But so long as you've done everything else right, that's a good loss, if that makes any sense. So in this case, like I said, if given the context of the trend, given the ability to set up a reasonable stop on the trade, yeah, it's a valid signal, that trend line touch. And it looks like it got down to your high probability profit objective and then started to bottom out a little bit. Now we're working a trend change signal higher. So the trend line changes color. Here's the move that changes the trend line color. Here's the counter move, that red bar, and here now is your signal right here. So you have a trend change signal now on the Falcon. And because this move is counter to what seems to be the dominant trend this morning, I would only go in with a single. And you can see that we've hit our high probability target there as well. David's asking about the hash mark. Is it the hash mark where you enter or beyond the hash mark? The hash mark technically is where you enter the trade. However, well, here, let's take the current example. No, it's not done yet. We'll go back here. Computers being what they are, they don't tolerate any gray, right? So when we were doing the programming and we decided to add a hash mark as a suggested entry, we had to set on a value. And the hash mark will print one tick beyond the high or low of the signal bar. The signal bar is the one with the triangle. The triangle tells you all the trading parameters have been met, and now here is a trade for your consideration. That hash mark will print one tick below, but if I have a swing point right there, or maybe even a tick beyond, I may offer up a tick or two just to make sure the market can clear that swing point. Now, it's up to you. Very often, if you have the market with a little bit of a tail on it like this, oops. There's some people that will say, well, if it's going to, sorry, let's get this right. I got it, wrong button. There's some people who would say, well, if it's going to fill down here, or pardon me, if it's going to fill here, it's going to fill down here anyhow. So we may as well take the earlier entry. And there's a certain amount of logic to that. Because it's only a couple of ticks away, it's very likely that if you fill here, you're going to fill down here, so why not get the earlier entry? Really, the choice is up to you. A lot of times for me, I don't know, it's in my nature. I just feel a little bit more comfortable looking for that little extra bit of momentum before I commit to the trade. But that's what the hash mark is. It's a suggested entry point. And like I say, it's all part of the computer programming. We had to specify a parameter, and I tried to get the programmers to say, well, can we take this swing high into account? They said, no. No, you can't. So here now on the Falcon, we've got the late filter entry that just printed. And you could do a second push, or you could enter above this swing high. Or if you were watching it, you could have entered right on the hash mark. You do have a chance to re-enter at the hash mark if you felt like you missed that earlier opportunity. Or there'll be some of you who say, oh, well, it's a counter trend move. Maybe I'll give it a couple of ticks still and enter a little bit further away. The nice thing about waiting for that little added bit of momentum is you can usually get by with a slightly tighter stop. What's unclear to me at this moment is the true nature of the trend. Is the trend this last leg up, or is the trend the bigger move down? Right now, I think, in spite of this little bit of a rally, overall, I think the sellers are still dominating the market. All right, so that late filter entry signal has since been spoiled. We're back into a red trend line, and now we're working a trend line lower. So here now on the Falcon, we can be saying, okay, well, this could be a with trend signal because the market's chopping about a little bit. Maybe I'll give them a moment here to gather their thoughts. See whether they're really interested. I can preset my trade, maybe something like this. And when everything looks good, I'll hit the submit button. And this would now be a trend change signal lower. Now we're into green bar or a green trend line again and a green filter, so I can scrub that order. So the market a little conflicted right now. Yeah, David says I'm setting a trend line across the highs of the swings here. Yes, see, it's still, is this going to be a bull flag and the market head higher, or is this a very big bear flag and the market's going to head lower? Tough call right now. All right, so we've got the eagle actually producing a green bar sell. That's a pretty good signal for the eagle. And darn it, a little bit late to the party. Okay, a little bit of a hiccup there. If this move down fails, if this little move down here fails now and the market does not take out this low, we will have a very solid test of the extreme and a very good chance to buy. And there is a little bit of buying coming into the market right now. So we're going to get either a number 1 or a number 2 signal here on the Raptor. And or you could even just set up with a possible buy above that high. I'm just going to get ready here on the buy button because I have a feeling this could develop quickly. So you may even view this as an early cloud cross, or you could even do an OCO. You could enter with your order below here, wait for the market to actually reconfirm the high. All right, and then you could enter with a buy above there. All right, so long, and I better get a stop and play here. There we go. Okay, looking for a bit of a move now. I'll delete my break-even order because, well, I'm in the swing. So let's see if we can't get this market to actually go somewhere. Seeing how I was a little bit quick with my stops last time. Let's see if the buyers are actually going to try to rally the market now. So the 66, 85, 86 area, it looks like it's going to be a little bit sticky. That's kind of where that last move lower started. So we've got some obvious selling in that range. This, by the way, is now going to be your #1 signal on the Raptor. So the cloud's fully crossed over. If the market rallies from here, it will produce a #1 signal. David's asking, if it were me, I'd put my stop just below the median line. What do you think? Yes, but the only problem with that is it's kind of an arbitrary point. Like, I always like to have my stops above or below a real price level. Like, for instance, the ideal stop for this trade, believe it or not, is actually right down here. Oops. Ideally, you want to stay 2 swings back, because what that does for you is it gives you some time to adjust your trade. And this is definitely a spot where I can say, yes, I am wrong about this position. It's time to go. The median line, although prices have reacted there, is really just an arbitrary point. You can see the market spent some time there, but eventually it failed. And at this point, I'm not sure that I'm really on the wrong side of the market just yet. Now, if this market swings up and I get a few bars in my favor, then I can pretty much bring my stops down below this level. And I can say, all right, if the market fails, then I'll take my stop out here, and I can be reasonably certain that I'm on the wrong side of the trade. Again, a stop loss is not a loss until it gets hit, right? It's your safety net. If you're on the trapeze or the high wire, that's there so you don't go splat, right? It's there so you don't blow up your account. But it's like a balancing act, because the tighter your stop, the lower the probability of success on your trade. The looser your stop, the higher the probability of success on your trade. And it's a tough lesson. It really is. And there they go, flinching again as we get close to 66, 85, 86. Come on, just give me that push through there this time. Yeah, David says if it pushes above 86, we'll have a higher high, higher low, and I think that's the holdup. If we get above 86, I think we're going to chase a few of the sellers out of the market, and we could actually see a little bit of an uptick here. The market is conflicted. The buyers are trying. They've controlled the last swing here. We're getting a number one signal building now. You can see we got the warning for a crossover buy. They're now the completed number one. So things looking a little bit more bullish, but yeah, that's the stumbling block right there. 66.86. You can see the last half hour or so, the market's been very sideways. All right, let's see what they do this time as they get above, or try to get above 86. No, they keep stumbling. One more push. Here we go. See, now we're followed up with the number three signal. I actually don't, I would consider that one signal, but I don't like to see them develop that close together just because it's kind of showing a lack of momentum. Come on, buyers here. We'll use the magic mouse. I don't usually like to manipulate the market in this way, but I will push the market higher with my mouse, and that will at least allow me to get the trade up to a break even. Come on, let's go. Wow, what a sticky point. There we go. Here, we'll just help you over the hurdle. Come on. Oh, you know there's got to be some serious selling here at 86. Okay, there we go. So we hopped above 86, and our parabolic's going to be too tight. There we go. Come on. After all this, I don't want to stop myself out early. Come on, you stinkers. Let's go. I could see 67 being another possible target. So the primary resistance line at 67.03 half. I could see that. That's reasonable. In fact, I will even set my profit order here at 67, maybe just a little bit before. Okay, and I'll take the trade to break even at this point, and I'll let Parabolics take it from here. Oh, a little bit of an early reaction again to 66.90. Oh, come on. Don't swing too hard. Looking for some support here at 66.86 now that we broke through it. And again, I know my stops are tight, but maybe they'll let me ride this swing. It's a fight for the buyers. There we go. Okay, I can go now back to my parabolic. David, great observation, and I should have pointed this out some time ago. David asked, why are some of the candlesticks fatter than others? That is because, and let me go here to a different chart so I don't mess up my trade. I'm using the dynamic equivolume bars from Indicator Warehouse. If you're familiar with equivolume charting, equivolume charts show you the volume on a bar relative to the other bars. So the fatter bars have more volume, the thinner bars have less volume. You can get, normally equivolume charting only works on time-based candlesticks, but with the dynamic equivolume bars from Indicator Warehouse, you can put them on any chart style. So the chart style I'm using, the dynamic equivolume bars. And it's, you know, a lot of people consider volume to be one of the most important indicators in trading. And this is an easy way to incorporate volume into your charting. Certainly seems a lot easier than using your traditional volume histogram. But you'll see the bars that have the greater volume to them are the wider ones, the fatter ones. Yeah, sorry, I should have pointed that out, but thanks for asking. I do forget these things. All right, how are we doing here? Oh, parabolic's doing pretty good. I'll stay with the parabolic mode. We're starting to flinch a little as we get closer to 6,700. David asked, do those come with Raptor 2.0? No, they are what we refer to as a system add-on. So if you go to the Indicator Warehouse page and you can search dynamic equivolume bars, there they are, universal equivolume bars, and you can learn all about them. All right. Got tagged on that little bit of a hiccup, but that's okay. That was a pretty decent run up, and I'm fairly pleased with how I handled that trade as well. Okay, so on hold again for a little bit. Now the market seemingly a little bit more bullish after the earlier move down. But a pretty good day overall. To start the week, why not? We did get some decent signals along with the one that we were following there. It looks like here on the Hawk, the same time we were looking at that Raptor #1 signal, we were getting a first micro macro cross signal here on the Hawk. The Hawk now back into yellow bars and a red bar buy, which is suggestive that we might be near the end of the uptrend, or at least the short-term uptrend. The Falcon also producing a trend change signal. This would have been right in sync again with that Raptor signal. The Eagle, a little bit more conflicted, however. The Eagle trading band here, very, very sideways, but it does open up the opportunity of an OCO type order. flopping around here a little bit again, kind of checking the top end and the bottom end. Very balanced, I would say. Yes, David's asking, am I correct in remembering that you said the Eagle, the Falcon, and the Hawk are built into the Raptor? That is absolutely correct. The Raptor actually came about because a lot of DTS owners were trading on laptop computers. And they found it a little cumbersome trying to monitor 3 charts on one screen. So they said to Adam, can't you just give us a system where we can watch the markets on one screen? And that was kind of the impetus for developing the Raptor. The Raptor does incorporate elements of the Hawk, the Falcon, and the Eagle in one trading system. The primary signal generation of the Raptor is the Falcon swing trader, but it also balances that with the Eagle and the Hawk. You can see the bar colors take a lot of their cues from the Hawk programming. And then, of course, we have the trading clouds, which are direct from the Eagle. The Eagle Trend Trader is also programmed into the filter down here to try to give you a trend bias. I've always struggled to come up with a good analogy for the Raptor versus the other tools. You know, sometimes I mentioned the analogy of a hybrid car. The Raptor is like the Prius, where it's not a Corvette and it's not a Ford pickup, but it will still get you A to B and you can still move stuff in it. Is it as fast as a Corvette? No. Can you haul as much stuff as a Ford pickup? No. Those are kind of like your specialized tools. And that's, each of the DTS tools, like the Hawk, for instance, the programming for each of these tools is specific to their environment. It's not like the Hawk is a 5-minute chart and the swing trader is a 15-minute chart and the trend trader is an hourly chart. No, that's not it at all. The programming for the Hawk scalper is entirely different than the programming for the Falcon swing trader, and that is entirely different than the programming for the Eagle Trend Trader. So these are kind of like your specific tools, and these are your Raptor or your hybrid tools. But that, I don't want it to sound like somehow the Raptor is inferior because it's a hybrid. No, it's not. I don't want to make it sound like the Raptor is weaker because it's a hybrid, because it's not. Very often you will see the Raptor, especially when it comes to counter trend opportunities, you'll see the Raptor give you your first best counter trend opportunity. You can see here we had a couple selling opportunities on the Raptor, and yet we did not get a comparable signal on the Hawk or the Falcon. Well, I guess the Eagle gave us the rule of 3 signal here, but it is not unusual to get Raptor specific signals even ahead of what you may be seeing on the other tools. Generally speaking, however, the Raptor will sacrifice quantity of signals for quality of signals. So a lot of DTS owners, when the Raptor first came out, they got Raptor and they used it almost as a filter, just to say, okay, well, I'm getting a a buy signal here on the Eagle, but it's not in sync with the Raptor, so I'm not going to take it, or whatever the case may be. Okay, we're still kind of bouncing around here. Yeah, like David says, the median line's holding the market pretty well at this point. 66.75, 66.80, it does seem to be a bit of a sticky spot today. And if I remember right, it was a little bit of a sticky spot on Friday as well, as the market fell off some. I think this whole range between 66.75 and 6,700 is really the big range that we're stuck in at the moment. That's what I would say anyway. And once again, they just seem fairly content to bounce back and forth. And this will be true for all your tools, but when you're getting a lot of signals and very little follow through, you should consider yourself in a sideways market. And that is always a little bit of a problem, sideways markets, because of course, the lack of follow through. are they doing now? I don't know, they're trying to stay bullish. They can't get bearish. It's, I don't know, it's a funny market right now. If you really felt like you had to trade, you could do another OCO type order here. Otherwise, I would suggest waiting it out. All right. I wouldn't recommend this at home, but we've got nothing going on here, so I'll just throw a bracket on. Remember, when you do OCO orders, those are live the moment you put them on your chart. Here, maybe I don't want to crowd it quite that much. All right, there's another number 3 order. Here go the buyers. All right, well, the buyers stepping up, putting some heat on the sellers. Get my stop enabled. There we go. And I'll hold my stop back below this last major swing low. Again, if you're lost for a stop, 2 swings back will usually keep you far enough away that the trade will at least have a chance. All right, let's go with the parabolics. Stops are at break even. Now this market, it's a little bit bipolar. It's thinking about it again as we get close here to 6,700. It's wondering whether or not they really want to go higher. There we go. All right, now we're cooking. Okay, back to 6,700 and the resistance line, as well as the high of the morning. A break above there could see some decent follow through. All right, they're thinking about it. They're holding up a little bit. Oh, are they gonna tag me out, or can I hold on? We'll hold the stops right here. Oh, they did too. They let me ride out that one swing. Okay, I'll turn my parabolics back on. I thought we might have seen a little bit more of a breakout here when we reached the highs of the morning. Where's the next stop? Once we get above here, we are, whoa, all the way up to 67.31. That would definitely be a home run. Come on, one more swing, and I think we're off to the races. What time is it? Oh, we're kind of closing in on the lunch hour. The early lunch hour. Traders are chomping at the bit. And are they going to let me? No, I didn't think I'd be lucky the third time. Well, that's okay. That was a decent enough little move. I have to admit, it was a stronger move than I thought we were going to get to the upside. But that's trading for you. So one thing about trading, you can always expect the unexpected. How is that for something deep? Very, very deep for a Monday morning. And well, we got a 4-arrow consolidation here on the Hawk. So at least the Hawk seems to think that the market's going to head higher, at least for the little short term here, enough to get a scalp target anyhow. And we have your basic trend line touch on the Falcon. So the Falcon also producing a short-term swing target. The only problem with these types of trades is not so much calling the direction, but rather where am I going to place my stop? If you go with Eric's rule of 2 swings back on a stop, well, that's a little bit tight. You're forced to put it back here. It's doable, but it's going to kind of be tapping you smaller account traders. And it's going to make a lot of you very nervous to have that kind of exposure in the market. But I'm quite content to call it a day. I've gone 3 for 3, which is a pretty decent day and not a bad end result. If you're going to stick with the market this afternoon, I think a rally up to the next resistance line here at 67.30, I'm going to call it, very plausible. The market does seem to be in a short-term uptrend and a longer-term downtrend. Thursday and Friday were both bearish type of days. So don't count the sellers out just yet, but for the immediate short term, I think the buyers have the market in hand. All right, gang, I think we're going to button up shop here for the morning, and I will see you again tomorrow. I'll talk to you then. Bye for now.